All right, and we're live. Can everybody hear us? If you can hear us, please give a thumbs up. Just doing a sound check. Hello, Dino. Welcome. Can you hear me? And maybe a sound check.
Yeah, testing. Can hear you well.
Awesome. I can hear you as well. Okay, so folks, if you can hear us, just give us a thumbs up. If just doing a sound check. Okay, so welcome everyone. Today is Thursday, the 2nd of December. And we know you're like, well, why is Dino on? It's not the second Thursday of the month. Well, it's because Dino's traveling again next week, I think, or
Yeah,
next week,
it
right?
should be next week. Yeah.
Yeah, and
Well, we'll
so
see. Really, I mean,
we'll see,
depends,
we'll
right?
see. Yeah, yeah. Um, yeah, so that's why we're doing it today because Dino may be traveling next week, and so we don't want to miss out on Dino's insights, right? It's always a pleasure to have Dino on. If you're joining us for the first time, I'll let Dino introduce himself a little bit later on. But Dino is a special guest from Santiman. He comes on once a month on the second Thursday of every month, and he is a pleasure to have. Like Dino is so full of information in his head, and so every time he comes on, I get insights. So welcome everyone, and good evening, and good afternoon, and good morning, depending on where you're signing in from. So today's Thursday, the 2nd of December. I hope everyone is doing well, staying safe. Um, and yeah, look, Dino's no stranger to this show at all. Dino from Sentiment, everybody knows Dino, right? Our preferred on-chain and sentiment analysis platform. Um, so look, if you're tuning in, whether you're coming in from Facebook or YouTube or Twitch, if you're coming in from YouTube, click on the bell icon, choose all, and then each time we come on live, you'll get a notification. If you're on Facebook or Twitch, follow us. Okay, feel free to tag your friends, your family who may be interested in the topic. Yeah, thank you, Sam, for confirming the sound check. And yeah, look, during the stream, feel free to type in any questions you may have in there, and we will get to it either at the end or during, right? So I'll kind of moderate as Dino kind of goes through reading the tea leaves, and he's really good at it. So what do we have this week? There's quite a few things, right? Omicron sounds like a transformer. That's been announced, and it's affected the stocks. It's affected the stock market. Has it affected crypto? Well, we'll see. We'll see a little bit later on. Dino will have a look and talk about it. And look, before handing it over to Dino, just wanted to share with everyone that about 2 weekends ago, we had our first and last crypto class for 2021. There were a total of 20 something students who came, and it was a hit, right? I believe, we got very positive feedback. Everyone who was there loved it. And, and Dino, you'll be happy that, there was a small part we talked about sentiment analysis, and we talked about on-chain analysis.
Nice.
So it was quite a hit. And backed by popular demand, we're going to have more classes next year. So anyone out there who's listening, and if you're interested to learn a little bit more about crypto and you want to come for crypto class, type class in the comment section, right? And someone will get to you. And yeah, look, I hope you can join us because, if you're going to put money into this asset class, first invest in yourself, invest to figure out what this crypto thing is and what it means, and then you're going in with your eyes wide open and armed with knowledge. Okay, without further ado, I will hand this over to Dino, who will introduce himself. Over to you, Dino.
All right. Thanks, Andrew. So, like Andrew said, my name is Dino. I'm one of the market analysts at Sentiment. Sentiment is sort of an all-in-one intelligence platform for cryptocurrencies. So what we do is we try to provide as much data as possible about specific coins outside of just price and volume related data. So still in 2021 and now almost 2022, a lot of people rely on price and volume information to make most of their decisions on where we are in a market cycle, which we think is kind of short-sighted because crypto specifically has such a wealth of data that is still sort of unused and remains unutilized, even though we do believe it has alpha. So we built our platform around those additional types of information. Mainly, we provide on-chain data, social activity data, and development activity data for about 2,000 cryptocurrencies. Now, obviously, that includes Bitcoin, which we're going to be talking about most today, but also a lot of Ethereum-based coins, other blockchains that we're integrating on the platform as well. So there's quite a lot of information on a lot of different tokens. If you want to really gain more insights and add some context to market events, I think our platform is very good, not just for veteran traders, but also for beginners. We've sort of made sure that the website is very, very retail friendly. And we're continuously trying to add more educational material for people that are just sort of getting into on-chain analysis and other types of fundamental analysis. So yeah, like Andrew said, we'll mostly be talking about the impact of Omicron and general sort of market update on Bitcoin specifically, but the website is not for like Bitcoin maxis at all, Bitcoin maximalists. It's very token agnostic. Whatever sort of asset you are interested in, I think that's the power of the platform compared to some of the competitors, is that it doesn't matter if you are looking into something like BTC or Ethereum, a $1 trillion market cap coin, or you're looking for a coin with a market cap of $100 million. We sort of provide the same fidelity of data. So that's pretty nice. Generally, like I said, though, we're mostly going to be talking about BTC. So Andrew, if you want, I can start by sharing my screen here.
Yeah, sure. I just want to add, something that we shared in the class. I'll just give you guys a bit of a preview. Is that when it comes to analyzing, crypto, it's always good to come in with an open mind and to have multiple views, multiple points of view, and to have different perspectives on it, right? You might want to, you could be a TA person, and you might want to, look at the TA and do some technical analysis. You might want to understand the fundamentals of what problems a specific coin solves, and then when you throw in the sentiment analysis and the on-chain data analysis, then you get yourself a pretty complete view of the coin that you're thinking about, buying or selling or shorting or putting in a long position, right? So it really helps to arm yourself with that knowledge. And I have to say, sentiment really is one of the best out there. It's the one that I use, and consistently, there hasn't been a single day where I don't use it. Yeah. Oh, and by the way, we're actually streaming from our office today. See in the background over here, there's another live stream going on, and
Nice.
we've got the CFO of the Malaysian Stock Exchange in there. Yeah. Okay. So without further ado, I'm gonna. Oh, there you go, Dino. Over to you.
Yeah, so can you see my screen?
Yes, looking good.
Okay, cool. So generally speaking, we're gonna sort of touch on a lot of different points that I've made in my weekly report. So every Monday we give a general breakdown of the market where we talk about what we're seeing from an on-chain social perspective and other data sources as well. So if you're interested in sort of a written form, a more sort of a long form article about the state of the market, make sure to go to insights.sentiment.net, and you'll find everything that we've sort of talked about when it comes to Bitcoin specifically. But overall, last week, we do these weekly streams on Friday where people ask us, we sort of tune in live at 4 p.m. Central Eastern Time, and we analyze the market. And so this was right about the time that Bitcoin started to drop. This latest drop here happened around maybe noon CET Friday. But before the drop, I had a few people ask me in chat in our private Discord what we think about BTC, and I thought it was looking relatively strong. Obviously, this was before the announcement about Omicron arriving in Europe came, so that's sort of jolted the markets a little bit. But from an on-chain perspective, I didn't think, and I actually still don't think that Bitcoin is looking all too poor. But I'll touch on the network level metrics for Bitcoin and its on-chain strengths in a minute. I do want to, start with the big, obviously the elephant in the room, and that is the arrival of a new coronavirus variant, which is sort of very quickly impacted the markets, not just the crypto markets, but the traditional stock market last week. I think everything, oil, stocks, S&P index, everything fell on Friday. It was a very uniform drop. Bitcoin was not able, similar to what happened back in 2020, Bitcoin was not able to sort of resist that pull, although it did recover fairly quickly. But the question obviously on my mind was, how do people feel about this drop? Because it's now not the first time that we are seeing Bitcoin start to waver in light of macroeconomic trends and global financial news. If you remember, and I'll zoom out so you can see exactly when it happened, if you're not that new to crypto and you were here back in 2020, you will remember this drop. Now, this drop looks very small now, but it felt catastrophic at the time. So I'm going to zoom in so you can see it a bit more clearly. There we go. So this is known as Black Thursday. It was the first sort of coronavirus-induced crash, both in similar to what happened to Omicron, just on a much larger scale, both in terms of the financial sector, the traditional financial sector, and the cryptocurrency market. It all tumbled in like 12 to 24 hours. This is a 35% drop in Bitcoin's price action in a matter of 24 hours. It was massive. And we also saw a lot of capitulation at these levels. We saw a lot of uncertainty and fear that Bitcoin was going to go back to triple digits instead of quadruple digits. We saw a lot of fear in the market and general sort of sense of unease. So that to us told us at the time that I think Bitcoin might be a little bit undervalued and oversold. And, that proved to be the case. So after the initial drop, Bitcoin very quickly started to recover, much quicker than the actual traditional markets. And over time, in the next couple of months, we saw it not only recover, but make new strides. So my question was, are we seeing signs that the retail traders are sort of experiencing some type of deja vu? Do they expect similar scenario to unfold with Omicron as well, where we see an initial drop, which was, now was not 35%. I think it was around 10 to 15%. But we see sort of an initial drop, an initial stint of panic, and then a lot of people, start buying the dip and in hopes of another Black Thursday scenario. So we had a few, we have these tools on Sandbase which use data from over 1,500 crypto-related social media channels. So what we do at Sentiment, one of the sources of information that we collect is data from crypto-related social media. So we listen in on conversations that are going around on crypto-related Telegram groups, subreddits, Twitter accounts, pretty much any type of channel where the main topic of discussions revolves around cryptocurrencies. We try to listen in, and we collect about 100,000 new daily messages from these channels. And one of the tools that we have on the platform, we call it Social Trends. I can show you how to get to it. So you get to go to Labs, Social Trends, and here you can type in any word or phrase, and you will be able to see the amount of mentions of that word or phrase specifically on crypto social media. So if I type something like COVID, or which is just a modifier that tells us, show me the mentions of multiple words, so COVID or coronavirus or Omicron, we can see, and I click go, this is what we see. Let's do last year just to kind of show you what the discrepancy looks like. So it's pretty obvious that, first of all, the retail sector of the market puts the blame of the crash squarely on the coronavirus, where we saw the biggest spike in mentions of coronavirus this year. We can actually zoom out to last 2 years just to kind of compare it to Black Thursday as well. So there we go. So this is when the Black Thursday happened, and this were the mentions of coronavirus now. So actually the total amount of mentions was higher this time around. However, you can see that the social dominance, which is this yellow bar. So just to be clear, the blue bar shows the total amount of mentions of these words on crypto social media. The yellow bar shows the relative dominance of those words on crypto social media. So how much are these words being mentioned compared to the totality of messages that we collect? So at the back in 2020, actually, the social dominance of COVID-related terms was higher than today, but the total amount of mentions are higher today. So it seems like in general, the crowd is very much convinced that the drop was due to like news related events and COVID in particular, rather than any sort of fundamental indicators of weakness from Bitcoin. And so the next question is, do they now feel good about the drop? Do they feel excited and confident about Bitcoin's chances to recover and bounce back, similar to what happened back in March of 2020 and forward? Or are they fairly scared? Because based on our the analysis and backtest that we've done on our social metrics, generally speaking, periods of elevated bullish sentiment and high chatter, high discussions about coins or increasing discussions about coins are typically not a great sign for a coin's price action, because what they tend to point to is rising euphoria, rising confidence about the coin, and actually irrational confidence, specifically from the retail sector. And as a result, there is sometimes an increased risk of short-term price normalization, so that basically the joy is sucked out of the market, for a lack of a better word. So one of the things then that I looked for, and we actually have this as a preset here, is look for mentions of buying the dips, or how many people are talking about buying the dips or dip on crypto social media. And so let's do last year of data to show you what the chart looks like. And so these are the mentions of buy the dip on crypto social media once we crashed back on Friday. So you will notice that this was actually the biggest spike in buy the dip mentions so far throughout the correction. So there were a few additional sort of spikes, like for example here at the first leg of the correction, here once we dropped once more. But generally, even compared to the first leg of this ongoing November correction, the amount of people that were talking about dip buying soared to a 2-month high as Bitcoin fell below 50, I think 53, around 53.5K is where it bottomed out here. So generally speaking, the Omicron crash, if we can call it that, seems to have definitely awakened some of the bulls for BTC. And now you will also notice that buy the dip mentions, and I'm actually going to remove social dominance just so it's a little bit clearer. Buy the dip mentions very often occur around periods of price depreciation and sort of short-term drops or corrections in Bitcoin's price. And usually they are never alone. So what I mean by that is that typically speaking, the crowd is far too early with their calls to buy the dip. Like for example, we can see here back in April, there was as soon as Bitcoin started to correct from its all-time high, similar actually to here, there was a lot of calls for people to get in on the action, buy Bitcoin at a discount. And it wasn't until we crashed once more that the crowd was proven right, although really it was far too early. It was a similar story with the entire May correction. There were several sort of stints of buy the dip calls, and it really wasn't until we saw very, very low levels of excitement and euphoria about Bitcoin. Not a lot of calls to buy the dip here relative to what we saw previously, that we started to recover. And then we saw a lot of buy the dip calls here back in September, and it wasn't until the crowd sort of stopped talking about it and we saw sort of a pivot to more bearish sentiment that we started to recover once again. So generally speaking, we are not massive fans at sentiment. at the crowd being too excited about the prospects of buying cheap coins, because it can point to overvalued conditions in the short term. So the fact that, generally speaking, the crowd seems to be quite excited about the prospects of buying Bitcoin at a discount is not great for its short-term action. And we can also see how many people are talking about Black Thursday. Actually, I'll just use Black Thursday, which is the moniker that was given to what happened back in March of 2020. So I was also curious to see, are people making those same sort of comparisons to what we're seeing right now? Are people saying this is basically just Black Thursday #2, which would sort of tell us that they are expecting the same types of returns afterward? So let me see. Will take probably a minute to load. And so these are dimensions of Black Thursday on crypto social media. As you can see, I'll zoom out to the last year for you to see it. But generally speaking, there was quite a bump. I think it was the highest number of mentions of Black Thursday over the last year on crypto social media. So there is a portion of the market that is convinced, specifically some of the retail traders that seem to be convinced that the current crash is very reminiscent of what we were going through back in 2020. And so that, to me, is a little bit worrying from an off-chain perspective for Bitcoin. Even though some of its network metrics and network activity metrics still look strong, this is something that is a little bit concerning to me from a short-term perspective of Bitcoin's price potential, is that the crowd is very excited potentially. And so I'll show a few additional metrics to sort of drive the point home that it seems like we are seeing a reawakening of the bulls and reemergence of bullish sentiment. But there we go. So this is the number of mentions of Black Thursday. Some of it happened slightly before, and then a lot of it happened right after the crash. But compared to the last year, you can definitely see just how massive it is. So the people on crypto social media definitely reinvoking that Black Thursday scenario. So one last thing that I wanted to talk about when it comes to our social data is we, outside of you being able to search for any specific term or phrase and then see how much the crypto crowd is talking about it, we have also developed a machine learning algorithm which parses all of these messages that we collect about coins on a daily basis, and it labels. Let's say we want to see just how the crowd is feeling about Bitcoin, right? We don't want to see only the number of mentions of Bitcoin related terms. We also want to see how the crowd is feeling about Bitcoin. Are they bullish? Are they bearish? So what we do is we take all of the mentions of Bitcoin that we collect on a daily basis, and then we parse them through a machine learning algorithm that labels these mentions as positive, negative, or neutral / undecided. So the end result is this chart, which we call weighted social sentiment. Essentially what it is a measure of the average crowd bias or retail bias towards Bitcoin based on data from hundreds of different crypto-related social media channels. So what we can see specifically right now, essentially what you are seeing in this orange line is the higher that it goes, the more bullish the crowd is towards a particular coin, in this case BTC, and then the lower that we get, the more bearish a crowd is about a particular coin. So here I believe we are looking at the last year of data. Yes, we are. And in the past 3 to 5 days, essentially since the crash last week, we are seeing once again, even though at the time we were actually slightly in the bearish territory. So because Bitcoin was still sort of struggling to recover, we were in fact quite worried about what was going to happen next. In the past couple of days, we are seeing another relatively significant spike in Bitcoin related sentiment. So this is something that's not too dissimilar to what happened back in May of this year. So once we saw the sort of first layer of the correction back in May, when Elon Musk announced that Tesla was no longer going to accept BTC as payment, we saw a similar uptick in related sentiment towards BTC, because similar to what we're seeing now, a lot of people were expecting Bitcoin to recover very quickly. They thought that this was just a news-driven dump and it wasn't going to last long. Essentially, the Bitcoin was going to be able to recover relatively quickly. So these types of indicators are a little bit concerning in terms of Bitcoin's short-term price action. Generally speaking, we at Sentiment quite like, although, there is no silver bullet as far as metrics are concerned, but we do, as a rule of thumb at least, like to see periods in time, like for example here, where the average retail investor is quite concerned about Bitcoin's chances of recovery or upward momentum. So generally when the crowd is bearish, when there's not a whole lot of hope, and in fact, most of discussions are, FUD, which stands for fear, uncertainty, and doubt. When most discussions are filled with those three terms, it's for us a more opportune time to potentially accumulate specific coins. When everyone is already shilling the coin and there's quite a lot of irrational expectations about the coin, that's not necessarily a great sign for its short-term price action. So we are seeing also a few a few signals or signs that participants in the market are becoming more and more bullish, not just off-chain, so in social data, but we are seeing some on-chain signals as well. Specifically, I mentioned one in this report. Let me show you real quick. There we go. So I mentioned this chart. So if you don't see it here, it says wrapped BTC locked in CDPs. So this is a little bit more complicated. I'll try my best to explain it as simply as possible. There is a system or sort of a decentralized finance protocol called MakerDAO, where it lives on the Ethereum network. And what you can do is you can put some coins as collateral to borrow DAI. DAI is a stable coin which was sort of created by the MakerDAO protocol. So essentially what you can do is you can put a bunch of money in the project and you can extract some of you use that money as collateral to take some stable coins from the protocol that you can do whatever you want with, and then eventually you can repay that debt and unlock your collateral, right? So here specifically what we are seeing is we're seeing the amount of wrapped Bitcoin, which is essentially just Bitcoin that has been transported to the Ethereum platform so that it can be used on Ethereum. We're seeing the amount of wrapped Bitcoin being locked in the MakerDAO ecosystem, these so-called CDPs. So why is this interesting, or why is it important that while the Bitcoin was crashing last week, we actually saw an uptick in the amount of wrapped Bitcoin locked in CDPs? Sometimes this happens when the market is becoming increasingly bullish about a coin. So essentially what locking Bitcoin in MakerDAO system allows you to do is it sort of allows you to go double long on BTC. So what people sometimes do is they take their Bitcoin, they put it on Ethereum, they put it in in the MakerDAO ecosystem, so they lock it there and they extract DAI from the MakerDAO system. And then what they do is they take the DAI and they go and buy more Bitcoin. So they're now sort of going double long on BTC. They are so confident that the price of Bitcoin is going to continue rising that they're more than happy to, first of all, basically deposit Bitcoin as collateral and then use that debt that they have now created to buy more BTC. This is another sort of sign of potential market euphoria and increasingly bullish sentiment towards Bitcoin, which we're not super excited about. Let's put it that way. So generally speaking, there are some signals that the market is a little bit they're experiencing a bit too much euphoria about a global potential, prolongment of a global pandemic. Because I guess they're just expecting to see the same thing that they saw back in 2020. So from an on-chain as well as off-chain perspective, there are some signs to be slightly concerned. Obviously, these are relatively short-term indicators. For example, sentiment changes very quickly, but it is important to note that as of the time, I guess, of this recording, there are some slightly concerning signals about Bitcoin's off-chain data. Now, there is another sort of layer to this, which I do want to mention at least very briefly, which is the development that we saw over on the derivatives market. So it's not just sort of the social crowd that is feeling more and more confident about Bitcoin. We also see some signals that the derivative market is becoming increasingly bullish towards BTC. And we can see that through the funding rates of Bitcoin on various high volume exchanges. So funding rates are essentially a fee paid by one side of the perpetual contract to the other. Essentially what that means is when a funding rate is high, it means that Bitcoin longs are paying Bitcoin shorts, and therefore the market is on average more bullish than bearish. And then when the funding rates are low, like here, that means that Bitcoin shorts are paying Bitcoin longs, and the derivatives market is, in particular, is increasingly bearish. So what we saw, like I said, similar to what you see with the social sentiment of Bitcoin, is we actually saw and are still seeing several spikes in Bitcoin's funding rates on Binance, BitMEX, Huobi, and a few other exchanges. So what that seems to suggest is that even though Bitcoin has been crashing and has been losing value, there is sort of a conglomerate of traders that is moving to go long on Bitcoin or to bet for Bitcoin, thinking that Bitcoin was going to essentially be able to recover very quickly. So if we take a look at the last years of data when it comes to funding rates, we can see that elevated funding rates can sometimes coincide with local price tops for the coin. Now, keep in mind that obviously this whole stretch between January and March is much, much lower in terms of its funding rates, or at least spikes in funding rates compared to here. I don't think that these levels were necessarily going to see happen again, maybe even ever, simply because the amount of leverage that you can go with on sort of Binance and FTX has been reduced quite significantly in the past 6 months. So there were several sort of very high profile articles about FTX and Binance and how you can go margin trade with 125x leverage or whatever, and sort of very painting the cryptocurrency exchanges as a high profile casino. So what Binance and FTX did in response was they reduced the total leverage from 125x to, I believe, 20 or 25x today. So I think that is also going to eventually sort of impact the funding rate. So we're not necessarily going to see the same level of activity that we see in the first 6 months of the year. But generally speaking, you can see the trends, right? And the trends are extremely high funding rates, similar to sentiment, can point to periods in time where a particular group of stakeholders or market participants are very, very confident about Bitcoin's short-term and long-term potential. And so it's not surprised that we see a lot of longs at points of local price stops for Bitcoin, because the market is overvalued and there's a need and also a lot of incentive to liquidate these longs and crash the price of BTC. So we have seen this on a lower scale or a smaller scale around several of local price stops for Bitcoin since. So generally speaking, similar, I guess, to Bitcoin sentiment, social sentiment, we do more like to see these periods in time where Bitcoin's funding rates are actually negative, which seems to suggest that the crowd, or sorry, not here the crowd, but the derivative traders in particular, is quite concerned about the potential for recovery of BTC. At the moment, not only are we not seeing that, but we have actually seen a little bit of an uptick in Bitcoin's funding rates over the last 4 to 5 days. So, long story short, a lot of people seem to be expecting the very same scenario that we saw in 2020. And so at Sentiment, our founder has sort of built the entire platform around this idea that the crowd is very often wrong, and that it might pay to bet against the crowd. So it seems like more and more the crowd consensus is very bullish, which provides a little bit of concern for us in terms of Bitcoin's short-term action and the ability to recover back to an all-time high level, because we think it's a little bit overvalued for the time being. So just keep that in mind. I will talk about some of the more promising indicators for BTC at the moment, but these are not. So Andrew, before I dive more into specific sort of on-chain metrics, anything the chat is asking or anything that you want to mention before we continue?
Yeah, no. Thanks for asking. Look, I think it's actually really cool. I might have some questions to perhaps look at some specific coins later, if you You have time?
Sure.
Yeah. So in particular, well, one in particular would be Ren, and the other one's Litecoin, because I'm trying to understand, based on the on-chain metrics, Litecoin seems to be gaining, steady adoption, but you don't see the price reflecting that, and that's it'll be interesting to do a bit of a deep dive on that.
Sure. Yeah.
But I'll let you continue first, and then yeah,
Okay.
then we can. Okay.
All right, let's talk about more sort of on-chain level activity for Bitcoin. So most of the metrics, with the exception of MakerDAO metrics that I talked about so far, these are all off-chain metrics, so metrics that have not been collected from the blockchain directly. So now I'm going to talk a little bit about what we see in terms of the data that we collect by basically running our own node on the Bitcoin network or the Bitcoin blockchain, and the types of insights that we can gain from network level activity. So some of the things that I like to start with are things like daily active addresses, right? And I mentioned this in the weekly report as well. Here, potential signs of network inertia. So essentially, active addresses are a metric that shows the total amount of unique addresses that are interacting with Bitcoin on a daily basis. By interacting, I simply mean amount of addresses that are sending or receiving Bitcoin daily, right? So generally speaking, and I'll actually zoom in a little bit more so you can see, generally speaking, we have seen in the past that periods of price appreciation go hand in hand with an increase in network level activity or address activity for a coin. So what that essentially means is that, a lot of people use daily active addresses, on-chain analysts in particular, use daily active addresses as a proxy for the amount of demand in a coin, right, on a network level. So it sort of stands to reason that the higher the demand for a coin and the higher the general sort of network effect for a coin, which is essentially what this chart is trying to show, the more from a fundamental point of view, the more support there is for a prolonged price rally. So with that being said, we have seen, for example, between sort of November of 2020 and May of 2021, we have seen a clear uptick in the amount of addresses interacting with BTC, which have sort of peaked. I think this was an all-time high, by the way. It's sort of 1.36 million here at some point. But generally, we have seen an average of about 1.15 to 1.20 million addresses interacting with Bitcoin on a daily basis before the crash. And so once the crash happened, there was around 35 to 40% drop in the amount of addresses interacting with Bitcoin daily. And I can actually show you just how much it was here. So about, let's see. Yeah, so this is a 36% drop in about 15 days time in the total amount of unique addresses interacting with Bitcoin. So basically, more than a third of all addresses sending or receiving Bitcoin on a daily basis has essentially been removed from the market or has departed from the market in about 2 weeks once the Bitcoin correction happened. So generally, these sort of signals of network euphoria are a little bit concerning, because what they can suggest is that there is less and less of a fundamental support for a prolonged rally. The network is pivoting back to dormancy, and overall we are seeing a disregard for Bitcoin's price action, and most people sort of removing themselves from the market for the time being. So on a very smaller scale, or sort of a micro scale, and I'm actually going to take the last 6 months. In fact, let me first of all just talk about the fact that we have, since sort of July, starting in July, we have started to recover in terms of the total amount of interest in the Bitcoin token daily on the network. So we started slowly to recover from like 700,000 daily active addresses all the way to, and we have peaked here at, I believe, 1.19 million. So quite a strong recovery. Essentially here we were back to exactly the same levels that we saw during the first 5 to 6 months of the Bitcoin rally and the Bitcoin year, really. So what I talked about here in the Monday report is the fact that I think this week may be pivotal and very, very important for Bitcoin's price action in terms of what happens with its network level metrics. So generally speaking, as you saw a minute ago, once we start a correct, and especially when there are large corrections, there's typically a sign of declining or dwindling network activity, right? So if that happens, we see less of a fundamental justification for Bitcoin to continue rising, but because the amount of value being created on the network, the amount of value being transferred on the network daily is diminishing. So I said that, and because a few days ago when I was writing the article, we have seen sort of a clear downtrend in the amount of daily active addresses. I think daily active addresses have, dropped by about 17% in about 3 weeks' time. So I said that if we continue to see this decline similar to what we saw back in May, between May and July, we might see a difficulty or an obstacle, an on-chain sort of fundamental obstacle for Bitcoin to really recover back above 60K and 65K in the short term. So what I am sort of pleased about, even though a lot of off-chain metrics are still a little bit iffy, what I am pleased about is the fact that in the last couple of days, Bitcoin has started to recover in terms of its network level activity. And what's more impressive is the fact that Bitcoin has started to recover, even though its price action, at least in the last couple of hours here, has sort of not been following, right? So generally speaking, although it's very early to say, what we typically consider a bullish divergence is when the price of a coin either consolidates or moves down. However, the amount of interest in the coin and the amount of network level activity for the coin moves back up or continues to grow. So generally speaking, that means that the market capitalization is declining, but the amount of value being created on the network is growing. So that might point to undervalued conditions, right? So generally speaking, the fact that we are seeing in the past 2 days fairly strong, first of all, a declining or sort of the rejection of this downtrend for Bitcoin's daily active addresses. And you can even draw a line here to connect all of the tops. There we go. So first of all, a rejection of this downtrend. And second of all, one of the highest levels of network level activity or sort of a daily address activity for Bitcoin since the all-time high here. It's definitely an optimistic signal, although it's far too early to say, as far as what Bitcoin can do from here. As long as network level activity continues to grow, if we see a period of consolidation for the coin or even a slight correction, which I would not be surprised about given the amount of bullish sentiment that I'm seeing on the market right now, if we see Bitcoin's daily active addresses still able to maintain this upward momentum, I think that might be a potential bullish divergence for the coin. And then another metric that I like to look at from sort of this network level perspective is the amount of unique Bitcoin circulating on the blockchain. So essentially what circulation stands for is it shows the amount of unique units of Bitcoin, or just unique units of the token, that are being transacted between addresses daily. So you can see similar trends. We have sort of diminished in terms of the amount of unique BTC being moved on the blockchain between May and June. Obviously, this was sort of a capitulation of a lot of holders, a lot of unique BTC being moved here at the local bottom, suggesting that this is when a lot of weak hands were dumping their bags. Since then, we have started to recover, and another question that I had in the article was whether we are able to not just maintain these levels, but also chart a higher high in terms of Bitcoin's daily or sort of even weekly circulation. So for now, we are able to maintain these same levels. This particular spike is an outlier. There was a lot of coins changed between different exchange addresses, it seems like, although I'm not still entirely sure. But even with this outlier, I would say that, we are sort of maintaining this level of about 250,000 unique BTC being moved between addresses daily. So there are a few indicators that are using these types of metrics to basically put a pulse on the market. So for example, the Nvt ratio is one metric that we use, which essentially looks at the dynamic or the relationship between a coin's market cap and a coin circulation. So like I said, if the market capitalization or the total market value of a coin is low or declining, but the total amount of coins circulating on the network is high or growing, that would be bullish for the coin potentially. And vice versa, if the amount of value being transmitted on the network is declining, but market capitalization is growing, that means that we are seeing a price increase at a time where network level metrics are declining. So that would be a bearish divergence. For now, as far as network level metrics are concerned, it's actually not looking all that bad. I think, it may be too early to tell, but generally speaking, this week, Bitcoin has still struggled to bounce back to the exact same levels that we were at before the crash. And still, network level metrics are looking strong. So I think that would be, for now at least, a hopeful sign for Bitcoin's future. Now, there is a particular group of addresses that we like to look at that are not giving us great vibes and great signs in the last couple of days. So here at Sentiment, you can zero in on a particular group of addresses that you are interested in rather than looking at the totality of network level activity. So for instance, what we are seeing here, we call it supply distribution. We are looking at the amount of Bitcoin that is being held by addresses specifically that are holding between 100 Bitcoin and 10,000 Bitcoin. So these are all Bitcoin millionaires, right? And I'm going to zoom out a bit so you can see what the trends are looking like over the last year and a half, essentially. So basically, these addresses, addresses holding between 100 and 10,000 BTC, they have started to accumulate BTC very strongly between October of 2020 and April of 2021. So there was sort of a 5 to 6 month period where the most of the trend was accumulation, suggesting that so-called Bitcoin whales or large Bitcoin addresses are starting to buy into BTC and inflate their bags. And there was also at that point a very strong narrative that institutional interest was driving this growth in price, which seems to be confirmed by its on-chain metrics as well. And then once we hit an all-time high, there was a period of distribution or essentially offloading of BTC from these addresses, coinciding with a fairly significant correction. So generally speaking, at least if we look at the trends, even though there were a lot of micro adjustments over time, trends seem to suggest that accumulation periods can be fairly decent for the price of Bitcoin, and then these periods of correction or sort of offloading can be a potential concern. So what we have seen specifically last 2 days, even after I wrote the article, is that the amount of BTC held by these addresses has started to drop once again. And so here we are looking at the total amount of Bitcoin held by these addresses as a percentage of Bitcoin's circulating supply. So currently these addresses hold 48.8% of Bitcoin's total circulating supply. We can see in absolute numbers what that means. So let me show you. That means 9.2 million. And in fact, if we zoom in a bit, so from here, 9.28 to 9.22, that means that 60,000 Bitcoin has been offloaded by these addresses in the last, essentially 48 hours. So 60,000 Bitcoin, I think that's $3.5 billion worth of BTC being sort of moved away from these addresses. Essentially not a great sign. Obviously, there are a few caveats to this. First of all, it doesn't necessarily have to mean that this is all sort of new sell-side pressure. This metric is a purely on-chain metric, and it shows what's happening between network addresses. It doesn't necessarily mean that these addresses are now moving their Bitcoin to exchanges. It could also be the fact that they are moving their BTC to other addresses owned by them, or moving them to a custodian wallet. So it's not necessarily that we're going to see sort of a immediate spike in network level sell-side pressure. Still, it is a little bit concerning, the fact that we have seen generally trends coincide with Bitcoin's price action over time, the whale trends or the trends of large addresses and what they are doing with their holdings. So the fact that we were actually quite optimistic about Bitcoin's chances because we have seen the large addresses start to accumulate BTC into the dump here starting at November 18th. But now it seems like essentially most of those gains that have been made in the last 2 weeks have been erased in the past 48 hours. So the question is, what happens next? Do they continue to reduce their exposure, these addresses, or are they going to start accumulating once again? Generally speaking, we're not great fans of this sort of prolonged depreciations of their combined holdings like we saw here and here, but remains to be seen. So generally speaking, yeah, it's the whale holdings are also not looking all that hot for Bitcoin at the moment. Now, there are a few other metrics that I wanted to touch on, but since we're already about 50 minutes in, Andrew, maybe it's a better idea to move into some other coins that you want us to look into to end the stream, right?
Yeah, sure. So let's move on and have a look at Litecoin. Now, Litecoin is one of the oldest coins around. It is 10 years old, whereas Bitcoin is 12, 13, right? And so it's been maybe so my question is, the daily active addresses seem to show that there's a steady growth in terms of adoption or in terms of usage of Litecoin, which usually coincides with I suppose adoption and price usually rises, but it almost seems like its price hasn't I don't know, caught up to adoption. Your thoughts, Dino?
Mm-hmm. Yeah, so we talked about this on our streams every now and again. People ask us about Litecoin. By the way, like I said, every Friday, so tomorrow at 4 p.m. Central Eastern Time, we go live and we talk about Bitcoin and Ethereum. Specifically what's happening right now, and then also take audience questions about other coins that they are interested in. So if you want to sort of join those calls or those streams, it's live on YouTube. Just type in Sentiment on YouTube and join our call live. But generally speaking, you are correct, Andrew, that we've definitely seen a very strong uptick in daily addresses for Litecoin, which have at one point in time, I think, actually flipped Ethereum or were higher than Ethereum. So we can actually confirm that if I log the price of Litecoin here and log the total daily active addresses for Litecoin here, and then we go to Ethereum and we paste Ethereum's active addresses. So this is Ethereum's active addresses in yellow and Litecoin's active addresses in purple. So very shortly, very briefly, back in the middle of October, we have seen Litecoin's daily active addresses actually for the first time, I think, either ever or at least in like 3 years, Litecoin's daily active addresses actually were higher than Ethereum for like a day. So Ethereum's daily active addresses were about 500,000 or 550, and Litecoin's were 650. So 650,000 addresses. I mean, it's a massive number. Now, it should be said that I think that generally Ethereum's daily active addresses are a little bit artificially deflated because of massive fees. So I don't think it's a completely fair comparison. But still, comparing them side by side, even with those caveats, it definitely seems like Litecoin's network level activity is growing. Now, that being said, even though we have seen it, sometimes I think daily active addresses, the network level activity in general, lags behind its price action, and we see this quite often. Let me move back to Litecoin, LTC. So, generally speaking, I like to look at the active addresses as more of a macro trend in terms of what might happen to the coin over time. But like this at the time, I thought was a clearly bullish trend. And in general, I was not sure, first of all, what this was caused by. I didn't really do a deep dive into Litecoin's network activity to figure out whether there was some sort of incentive scheme to basically motivate holders to move their bags, whether there were any sort of, whether this was a completely organic spike in address level activity or not. But assuming that it is organic, there's no other way than thinking that this is bullish, right? If there's 600,000 addresses interacting with Litecoin for the first time ever, where during a bull market, I think eventually we did see LTC sort of hit like a 30 to 35% uptick, which was, I think, long overdue. That being said, more recently, I think this is a trend that we have seen not just with Litecoin but with Ethereum as well. Since peaking at about 700,000, if we take a look here, there's been about a 42% drop in the Litecoin's daily active addresses in the last essentially month and a half. So it's not, this is not endemic to Litecoin. If you look at Ethereum, you will see a bit later, but still we are seeing the same sort of trend where the amount of daily activity has dropped by about 15%. So it's not as dramatic as for Litecoin, but generally speaking, these large cap coins have seen a decline in their network level activity in the last few months of the year. So another sort of sign that from a fundamental perspective, we are going to see a little bit of a difficulty for these top cap coins to chart new all-time highs or continue to move into price discovery if we're not seeing the same level of support on the network layer. Now, that being said, active addresses can often be a lagging indicator. So sometimes, the price will jump and jolt network into action, which I think is still fine, right? As long as after the fact, the network level activity continues to grow, I think we should be fine. But for the time being, at least, it's not necessarily happening. So the trend seems to be down. And so, we don't really have time to get into too many Litecoin metrics, but I would look into a few more, like for instance, MVRV, to just see where we are. And yeah, we're essentially at the same place where Bitcoin's MVRV is at about -4%. So for people not familiar with this metric, MVRV is a metric that tracks the average profit or loss of a certain group of addresses. So the 30-day MVRV ratio, which we are looking at right now, shows the total amount of loss or profit on average that all addresses that have acquired Litecoin in the previous 30 days are at. So they're currently at -4.2%. What that means is the average loss of addresses that have acquired Litecoin in the last 30 days is -4.2%. So the idea behind this metric is that the higher the MVRV gets, the more unrealized profits there are. And as a result, the more risky it is to enter into a trade, because you're entering into a trade against a lot of people that are sitting on a lot of money and that might dump those bags on you. And then the lower the MVRV gets, the more opportune time it may be to accumulate. So if I zoom into those, or zoom out to the last, let's say, 3 years of data, you can sort of see that there are, historically speaking, there are peaks and valleys for Litecoin and for Bitcoin as well. So for instance, we can see that generally speaking, anytime that Litecoin's MVRV starts basically breaking this sort of 25% level, it typically seems to suggest unsustainable rise in its price action and a increased risk that short-term traders are going to be start dumping their bags. And actually, we've hit it quite on the nose several times. And then when it comes to the other side of the aisle, we see several support zones. So the first support zone is around -15%, which is exactly where Bitcoin's is. And then another one at around -40%, which is like several sort of historical lows. We're still far away from this level of obviously negativity in terms of MVRV, but -4% still means that holders are still underwater or below break even. So there is quite a ways to go from a price action perspective before we move back into clearly overvalued territory. So generally, I like to see double-digit negatives when it comes to MVRV for Bitcoin and any coin, really, because it would suggest that holders are very, very below break even. So if you believe that the fundamentals of a coin are strong, you would consider this to be sort of a marker of undervalued and oversold conditions, and you might decide to enter into a trade. So at the moment, Litecoin and Bitcoin are both at around -4% when it comes to at least short-term MVRV, which I think, assuming other fundamentals are strong, leaves a lot of room for us to grow in the short term before we hit these levels of like +15% again, and we start to be worried once again. So yeah, generally that's sort of a very impromptu analysis of Litecoin, since we're already hitting on the hour. So I don't want to get too too much into the weeds here. But if you're interested in more info, we'll be talking more about Bitcoin and Ethereum and a few other coins tomorrow as well. Or you can just join our Discord, discord.com/sentiment, and ask me questions directly. We can talk there as well.
Thank you. Thanks for doing the impromptu one, Dino. And so for those of you who are interested, Dino mentioned that he does do one every Friday, and that's probably tomorrow night for us, 3 hours from now.
It's 2 hours from now. So
2 hours from now. Okay, so 11 p.m. Malaysia and Singapore time. So 11 p.m. tomorrow night. If you're interested, Dino's going to be on this live stream, and you can ask him questions about bags of coins that you hold. Now, thanks for that, Dino. Maybe I'll just talk about one more coin, Dino, and you don't have to do a deep dive on it, but the Ren team, Ren's probably one of your other favorite coins to analyze, and they made the announcement that host to host is now in production. And so that gave it a nice pump last night to about, I don't know, $1.05, and then now it's dropped back down to about 90 cents, I think. For those of you who don't know, Ren, so what host to host means, or what they've essentially been able to achieve, it sounds to me like they've almost come out of nowhere to then suddenly be able to be a layer one chain smart contract platform, which I think a lot of people haven't realized yet, which is going to be interesting to see if they can attract enough developers to actually come onto the platform and build apps on top of.
Yeah, I haven't actually kept track with Ren, to be honest, the last couple of months. Been mostly diving deep into the world of NFTs because we are working on some features that are NFT specific, sort of explorers of different projects and different protocols. But yeah, I mean, Ren has always been, I think, a very for me, like a fundamentally strong protocol, even when its price action wasn't all that hot. I think, generally speaking, the interoperability category of protocols and projects is going to be increasingly important, and Ren is one of them. So, essentially any coin or any project that can allow us to bridge coins between different blockchains and layer ones and layer twos is going to grow in value, and it's a very big narrative right now. So any projects in that category, I think, especially those that have proven and have a proven track record, a potentially interesting investment. Obviously, it depends on the time of the market, but yeah, for sure, I do enjoy Ren myself.
And obviously, nothing that we speak about tonight is investment advice at all. It's just two friends having a chat and letting Dino read the tea leaves and
Right.
tell me his interpretation.
Right.
But yeah, no, thanks for that, Dino. I'd be interested to find out more about what you guys are doing with NFTs. And if you want to share any info, feel free to do so.
Yeah, so I'm not sure if we'll be able to finish it before the end of the year. So I'll just say keep an eye on our Twitter account and join our Discord so you can see it when it goes live. But we are in the process of adding some NFT specific dashboards where you can look into certain projects, NFT projects, and get a bunch of information about their holders, smart money in NFTs, floor prices, and generally what the trend seems to be like. So whether the demand for a particular NFT batch or an NFT collection is growing or declining, who specifically is buying, the signs of whales and large addresses going into specific NFT projects or out of specific NFT projects. So those are some of the metrics and sort of stakeholders that we're trying to capture with these NFT metrics, something that's not really currently available on the market. So yeah, like I said, not sure. Developers are very busy at the end of the year, so might be January before we really see it come to light, but might be a few next couple of weeks. So yeah, just join our Discord and you'll see an announcement when we're live.
You can see me practically salivating, Dino. I'm excited for those features.
Yeah, it's
Wow,
something that we've been working on for the last few months, so almost there.
that is awesome. I'm really looking forward to it. Um, okay, look, I think it's past 9. I just want to say thank you to everyone who tuned in tonight, and thank you for uh, for being here with us, Dino. Appreciate you coming on, even though you'll be traveling, so you must be really busy. Um, and as usual, everyone, that wraps it up for tonight. Once again, thank you for tuning in. Thank you, Dino, for sharing your insights. Looking forward to having you back next month, which will be January, the new year, 2022. Geez,
Yeah, looking
2021
forward to it.
flew by so quickly, huh?
Yeah, well, I don't know if quickly is the word, but it definitely is
Yeah,
over. I mean, we can
yeah,
agree with that
yeah,
almost.
almost over. And wishing you happy holidays,
Same to you.
and happy New Year. So I'll see you next year, and we'll have you back the second Thursday of every month. Obviously, if anything changes, we'll we'll make arrangements for that.
Right.
Yeah. So once again, everyone, thank you for tuning in. Is there something else? Oops, sorry, that was Siri. Thank you for tuning in. And next week we also have another guest coming, David Schwartz, another regular on this channel, to update us on what's happening on his end. So David Schwartz is the project director of the Litecoin Foundation. He also runs his own startup called gethedge.io, where you can DCA in your wage or your salary into crypto. And so yeah, he's gonna be on to give us some updates. And anyone who is interested in in attending crypto class, we're having one next month. So January 14th to the 16th. So if you're interested, please put that in the comment section below. Um, and uh, with all this sentiment analysis that you shared early on in the in your when you were talking, Dino, I just saw I'll just flash a comment from I believe this is Alex. You'll probably pick this up in your sentiment analysis. Uh, yeah. If you don't know what that means, that's okay. But pretty bullish.
Yeah, exactly. So I think it's the sentiment of a lot of people, and anytime that's the case, we are a little bit on the other side of that. The other side of that scope. We'll see. I mean, like I said, the sentiment metrics really can turn on a dime. I think really what needs to like the ideal scenario, I mean, obviously not for Bitcoin holders, all Bitcoin holders, but for the market would be another sort of short-term correction, and these longs being liquidated, and the general sense of the market euphoria, and the Black Thursday repeating itself gets completely flushed out of the market, and we are able to move back into very, very bearish undertones, and from there, usually, like I saw or I showed both in terms of social sentiment and funding rates, when we are low, when the market is very unconvinced of Bitcoin's potential, this is usually the a fertile ground for us to grow from. We're currently not there. We're actually the exact opposite, right? So the crowd is very ready for Bitcoin to grow, and nobody is calling it a scam. Nobody is thinking about dumping their bags, which is a little bit concerning because you're buying into a lot of overhyped people. So the question is whether you want to do that or not.
So there's a lot of hopium in the market.
Exactly, a lot of opium. Yeah.
Yeah. All right. So that wraps it up for tonight. Thank you again, Dino. And thank you everyone for tuning in. Again, wishing you happy holidays, everybody. Stay safe, and have a great start to 2022, and hopefully the world becomes a lot safer from any more transforming name viruses.
Yeah.
All right. Well, have a great night. Bye bye.
Thanks, guys. Happy New Year's.
Happy New Year's. Thank you. Bye bye.